Ladies and gentlemen, it is my privilege to once again present Chuck Malamut in his 25th year here as our official financial advisor to the Hurley in the Morning program, official and exclusive. Chuck leads the Malamut Group at Morgan Stanley's Northfield office, and the number to reach Chuck's team is that he leads is 609-383-2010. The following program each week that we present Tuesday mornings in this 8 o'clock hour presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, there is a lot of moving parts. I mean, we've been talking about, obviously, Atlantic City, which I want to come back to later after you get done your customary agenda. But good morning, my friend.
Good morning, Harry.
Good to be with you.
It's certainly hard to believe that we're in the throes of summer.
Would these be called the dog days of summer?
Well, it traditionally is, and unfortunately, at least, let me back up. Historically speaking, August has not been a very good month for the market for a number of reasons. We're usually in that seasonal part of the year where a lot of people on Wall Street are on vacation. So volume has a tendency to dry up somewhat. So when you have moves in either direction, either positive or negative, they're exasperated somewhat because of what I'll say lack of volume. So what is happening now is, we are in the middle of earnings season. If you remember, one of the things that we talked about, earnings have, were tampered down somewhat by all the analysts. A lot of companies are either meeting or beating, and some are, on the edge. But that, what we're seeing is that continual pattern of the revenue miss on the top line. But again, being able to squeeze a lot out of your expense side, which ultimately, creates you get to your number, at least on a quarterly basis. I found it very, very interesting listening to you and Denny this morning on the way in. The ongoing saga, so to speak, of what's happening within Atlantic City, and the fact that now, as you stated to your listeners, the fact that the Atlantic City general obligations, which when you think about buying a municipal bond, Harry, I know that we might have chatted about this before, but it would probably be worth for your listeners to take sort of a refresher course. I mean, there are more municipal bonds out there than there are individual stocks and mutual funds. So the first thing you need to look at is obviously the type of municipal that you're buying. Is it guaranteed or by the state? Is it guaranteed by a municipality? Is it guaranteed by a county? So they come in basically. Well, I think we'll keep it pretty much at a high level here. Two forms: general obligation, which is based in this case on tax revenues, oftentimes, and then you have revenue bonds. So in the state of New Jersey, for instance, a revenue bond would be the New Jersey State Turnpike, Garden State Parkway, Atlantic City Expressway. Those come to mind because we all drive those roads and they're all driven with tolls, and that's what they refer to as a revenue bond. So as a bond buyer, what you need to be cautious of is one, the name, and two, the underlying mitigating factors within the bond itself. So in the state of Texas, for instance, which happens to be one of the strongest states out there, certainly hands down from a running a business in the state of Texas is a lot more friendly than it is here in the state of New Jersey. A lot of the Texas municipals are guaranteed by the state through what they call PSF guarantee, and very, very strong credit. And as a result of having that strong credit, when you look at supply and demand, that rate is going to be probably a little bit lower than you're going to find in most other states. When you go to the state of Florida, for instance, and now you're starting to see in the state of California somewhat of a resurgence there as they have gotten their balance sheet and their act back together, so to speak. And then you compare it to the state of New Jersey. Because, when we buy bonds, we have a lot of, state residents. And there is a significant differential of buying a state municipal or New Jersey state municipal versus Pennsylvania, New York. Because when you buy a municipal bond, Harry, while it's exempt from federal taxation, and if you're buying an out-of-state bond, let's say you're buying a Texas bond and you live in the state of New Jersey, you're obligated to pay state income tax on the income that you receive from that particular municipal bond. And when you look at the tax rates that we pay in New Jersey, unfortunately one of the highest in the nation, it becomes very you sort of lean to buying the state municipal versus being out of state. But what you need to take a look at is obviously credit and the creditworthiness of an individual municipality, county, or even in this case in the state of New Jersey. And when we are, if we were going to do a valuation or look at inventory that's out there, and if we were going to sort, let's say we did a national search, Harry, and we looked at state general obligations. And we'll use a 2025 to 2028 maturity. Just as, think about, we're searching. As I mentioned to you, there are just so many munis out there, and you have to be very, very careful what you're buying. So let's say we did a search, 2025 to 28 general obligation, and we sorted it by yield, highest yield on top. What you will find, state of New Jersey, state of Illinois, typically we're going to be on the top end. Obviously, Puerto Rico, as we mentioned, and that's a whole other discussion that we'll chat about in a little bit later today. But so when you mentioned with Denny this morning that I think it was Moody's,
Standard & Poor's,
S&P has now downgraded that debt to a single B,
3 steps down.
So you think about it. Let's think about triple A plus is the best quality, and even in the U.S. now we are no longer a triple A. There's pluses. There's very, very few. So you go from AAA plus, AAA minus, AA plus, AA minus, triple B plus, triple B minus. That is where you draw the line in the sand. Everything of what I just mentioned is what we consider investment grade. When you get below that triple B minus, you are now categorized as high yield or junk. So you go from triple B minus to double B plus, double B minus, B plus, B minus. So Atlantic City, I think you mentioned, is now a B. Is that correct?
That is correct, sir.
So you had 3 downgrades, or 3 notches they moved.
3 steps down.
All right. Yes. So they went from a B to a B plus, triple or double B minus, double B. So I'm guessing they were probably a double B minus, somewhere in that range prior to the downgrade.
And what does it mean, Chuck, when they will be basically 5 percentage points over benchmark?
All right, so let's go back to that example that we were searching at that 2027 maturity, and you're sorting by yield. What you'll find is that the highest yield is typically the lowest quality with respect to S&P and Moody's debt rating.
But in a macabre sort of way, is there an upside because there are people that or are willing to take risk for the yield?
Well, there are. I mean, this is where you have to be very, very careful, because if you buy a City of Atlantic City general obligation, that is the best quality that you're going to get in this city of Atlantic City. If you go to buy a revenue backed bond, municipal utility authority, for instance, that's revenue and not a GO, as is referred to, that would be even a higher producing income to you, because the quality of the debt or the ability to pay is not as strong as it is owning a GO. So in the state of New Jersey State GO, which has had several downgrades over the last several years, is stronger than, for instance, a municipal utility authority from a particular county.
You can't see the webcam, but I'm raising my hand to ask the professor to call on me because I have a question. May I pose my question? I was just thinking about something because of what you just said. The state of New Jersey, I don't believe wants Atlantic City to declare bankruptcy for a lot of reasons. There hasn't been one. It's almost written in that there shouldn't be one. And the state, if I'm not mistaken, aren't they backing Atlantic City? So, for example, you could go get this muni at 5% higher than the benchmark rate, and really it's insured, isn't it?
No, it's not.
You're telling me the state's isn't the state backing Atlantic City?
If you're buying insured paper, you're going to buy a piece of paper that's insured by any of a number of insurance agencies.
So the state is not even informally by how they've been operating. You're telling me the state is not backing that. I don't mean officially, but I mean by almost the stated policy of.
I think Atlantic City is a little unique in what is being, the way that the city is being run or managed. I guess is better put. The fact that the state is involved, but if you look at the covenants within the bond and the prospectus, I would venture to say, and please don't hold me truly accountable for this, I don't think the state of New Jersey backs those particular municipals.
I don't think they literally do, but I'm wondering if they actually do.
Now you think about, and again, we're not going to talk about politics here for a second because we're not, we don't go there. But
glad to hear you say that.
I was traveling this weekend, and I heard how wonderful the American Pharaoh event was at Monmouth Park.
I loved it.
What the media, and I read it on several sources, so I'm guessing it was like an AP article that got posted. I mean, our governor was booed not once but twice, and it was pretty vicious.
Booed terribly. I'll tell you what. What do you equate? I mean, we don't talk politics, but there's a reason that you either get cheered or you get booed. I personally think the national media has just done a number on our governor.
I think most citizens of the state of New Jersey are getting pretty exhausted from this national campaign, and the fact that
you don't think they like it very much that he's not here, and then he came here for American Pharaoh, and it's like, hey, you're here, and boo.
Yeah, and he's back. He's back out on the road. Obviously, I don't know, Harry. And again, did he make the cut or we don't know? Did he make?
We're going to officially know at 5:00 tonight, but I am guaranteeing that he made the cut.
All right, so he makes the cut, but he's he's
ninth
right,
he'll be ninth or 10th.
He's right at the bottom. So and you look at. When he came in.
But never forget, but hold on, Rick Perry was at the top this time in 2012.
But then he was in the outhouse. I think the average citizen, and again, I'm not polling, and this is just my thought process, Harry, and is the fact that there's so much work to be done here still in the state of New Jersey, not only on the state level, the county, and the municipal level. And you take a look at Atlantic City all to itself. I mean, he's been pretty much non-existent. He's not around. And the fact that he's out, I think, does not bode well for what the average, citizen that lives in New Jersey is thinking about.
And here's what I'm going to say to that: the truth sometimes, while it's an affirmative defense, doesn't trump. No pun intended. Sometimes pun is intended, but it's not intended here. Sometimes the truth doesn't trump perception. I know what Governor Christie has done for Atlantic City more than any governor in my 25-year broadcasting career. He pushed back when there was a big move to try to take casinos in other parts of the state. He gave Atlantic City this 5-year window. I realize that for political reasons, others have pushed back sooner than the 5-year window, but he really did set up the apparatus for Atlantic City to have an opportunity to stave off neighboring competition in other parts of the state. And I think that, unfortunately, he's not getting credit for the good things he's done. And there is this pile-on, almost Bridgegate, additional atmosphere of just piling on.
So, but now, if you look, for instance, I happen to live in Galloway, and when I came home from being out of town this weekend, I was greeted with a number of envelopes from the township of Galloway. and
I got mine last week.
And you know what that is.
Yes.
So you don't want to open it up,
Taxes.
and you start, and they make their, there's a nice letter in there saying, okay, we're going to extend you to August 24th. If you don't pay, if you pay individually, it's got to be in by that date. If not, go back to your mortgage company if you're escrowing. And I just did a quick look, and please don't hold me accountable to this, but if my quick look on this is that from the last quarter to this quarter went up anywhere from 7 to 8, maybe 10%. Now, that's not the rate. I mean, they want to collect the revenue,
yeah.
But we have no idea where we are with the pilot program. And when that's going to happen, if it happens. So, but
that's the reason that Standard & Poor's did what they did.
But the municipality is going to reach out to you and say, well, Harry, you live in EHT, so you need to pay us now.
Well, it's going to happen. That's why Danny Levinson and I have been having the dialogue we've been having. All 22 municipalities that are not Atlantic City, and I'll throw Atlantic City in there, all 23 municipalities, including Atlantic City, we're all going to have a county tax increase because of what's happening right now. Let me throw this out, Chuck. Standard & Poor's, and we'll just see what your training tells you is the answer to this. Standard & Poor's says, Atlantic City, you haven't shown us that you have a plan to deal with your debt. Hence, we're going to crack your behind 3 times. Bam, bam, bam. 3 steps down. You're lowered to super duper duper junk at this point because you didn't show a plan. I would make the case they have shown a plan. They have an incredible plan. Kevin Lavin put out a plan in March that called for cuts. It called for certain other structural, fixing of structural imbalances. And now it hasn't been the final vote took place. The pilot bills have been passed in both houses, and Governor Christie is deciding whether he will sign it, whether he will conditionally veto it, and use his authority to line item certain things. S&P, I'm trying to figure out why did they do this?
Well, Harry, I think that the be-all, end-all, or the S&P and Moody's are not the be-all, end-all. I mean, they had their fair share of issues several years ago.
Fair enough.
We went through the financial crisis.
But this still matters, though, that they did this.
Well, it matters, but I would be curious, and again, I don't follow Atlantic City debt on a day-to-day basis, but it would be interesting to see where the levels of those bonds were prior to the downgrade.
Yeah, see, here's what I just
a lot of that already built into the price.
Here's what I don't think is fair, and we still have about 7 minutes before the bottom of the hour break, so we can chew this over and still get to. I know you have a long list of, Fed, corporate earnings, future equities, China, Greece, and Puerto Rico. Puerto Rico didn't make a payment, and that's a big deal, I think. So we'll get to that. But Atlantic City cut a number of positions. Through attrition, they have reduced a number more. The school board, which counts as city purpose tax, if you will, even though on the school side, unbelievable amount of cuts there relative to anything that's ever been done in the past. And then you have a number of other things in Kevin Lavin's plan. I don't know how they didn't demonstrate to either Moody Investor Services or on this occasion Standard & Poor's that they actually do have a debt reduction plan.
Well, I think, Harry, maybe the problem is, as Denny mentioned, and you mentioned earlier this morning, the $500 million that you think is approaching $600 million. Yeah. That is a big piece that has to be serviced.
Yeah, but how can it be? And that's not even counting the fact that there's going to be 3 years worth of pension payments. Atlantic City has gotten a break in not making pension payments. How are they going to make a $70 million pension payment? Coming up, pretty soon. I personally believe it is closer to $600 million than $500 million when you count all the the additional Borgata liability and they're prevailing in the tax appeal and certain other things that are about to occur. I think it's closer to $600 million. How can Atlantic City? How could you ever put a plan that would satisfy analysts that look at stuff? There's no way to pay that down.
Well, I think, Harry, what happens is the rating services are that's what they do all day. And they're looking at revenue. They're looking, at potential where the revenue comes from. They're looking, obviously, at expenses. They're looking at, debt to income ratios. It's sort of like when you're buying a house, and when they go in and they say, well, Harry, your credit, is great at 700.
Oh no, it's a lot higher than that, Chuck.
Well, sorry,
Keep
Harry,
going. Keep going north, baby. North.
Well, Harry, I don't think you're at an 800, but
I'm not 800, but I'm not 700.
All right, so Harry, you're 750, we'll say.
Higher.
Okay. Well, let's say you're 750.
All right. All right, watch, Chuck. You went and did it. You went and done did it. Give me 1 second. Just humor me, Chuck. Humor your little brother, Harry. I'm going to do something I haven't done before because I refuse for there to be a discrepancy here.
Well, Harry, I'm just making an example.
No. You started it. Let me finish. I'm going to do something I haven't done before. What's going on here? Oh, I know what happened. Hold on.
Do you have the drum roll coming, Harry, or what?
It won't be a drum roll, but it's going to be very celebratory in nature. Unless, of course, I don't get my password right 3 times and then they take my account from me. Good news. Hold on 1 second. I have to go to the full website. I was on a. This will only take a second. This is worth it because you're going to be my independent corroboration. Just take me 1 second. I would have already been in, but I was on the app, which doesn't have the credit thing. Just take me a second. You're going to be very proud of your little brother, Chuck. Very proud. Let's see here. Okay. Hold on. Mr. Malamut, would you read into the record what that says?
Well, Harry, I'm very impressed. 801. You are clearly at the top of the heap there. I think I've seen a couple 830s of maybe.
Thank you, Mr. Malamut.
Maybe 840, but 801.
I was going to be modest, but when you were putting me down at 700, I couldn't let it stand.
So let's.
Then you were willing to give me 750, and I wasn't going to let it stand.
So at 801,
Chuck has got this smile. It's fantastic. My mentor.
So at 801, if you were going to secure credit, obviously the going rate for you is going to be significantly lower than someone that has wrecked their credit, which is in this high 500s, low six, it's like low 600s, and I mean, and you just talk to Brother Bill, and he can certainly attest to that. So, kind of put it, and the reason we even are having this discussion is take a look at the city of Atlantic City right now, and the fact that when they are able, when they borrowed that short-term money, everybody was parading around how great it was that Atlantic City secured financing. They paid a very, very high price for that. So what has to happen now, and as Deddy mentioned earlier today with you, certainly, the state of Michigan, city of Detroit, state of Illinois, city of Chicago, Chicago Board of Eds to be exact, for those entities to borrow, it's more expensive than it is for a municipality, a school district in the state of Texas. So it's like anything else, Harry. There's more to it than just the yield. It's great to get 7%, tax free. Think about it. You apply your state and federal tax rate, that return is probably for most people in excess of 10, maybe even close to 11%.
Minute before the bottom of the hour break, what would it – I mean, I don't expect you to have a precise answer to this, but just in general, sort of plain speaking terms, what would it take to be in such bad shape that you couldn't even do it, where, I mean, you would just be out of the business of being able to do it? There is a bottom to all this, right?
Yeah, absolutely there's a bottom. The bottom is if you
and sometimes you'll do a bond sale and nobody wants them, right?
Well, they'll get the sale. They'll get it done. I mean, you've seen them get pulled.
Yeah.
For instance,
even Atlantic City.
Not this switch over to equities, but in the IPO market, oftentimes you'll see a deal. They'll go on the road. They'll do the road show. They'll get indications of interest, and then because of what they'll quote market conditions, the deal will get pulled. It won't happen. Now, you don't see that as often in the municipal world. But what happens is it just becomes the price of admission. It becomes very, very expensive for the city of Atlantic City to if they could secure additional financing. Now, I'm not quite certain. Would an individual retail investor touch it? If you take a look, we'll do a segue, and we'll talk about this in a minute. In Puerto Rico, a lot of individual investors are not going to be hurt by the bankruptcy. It's not Harry, there are some unis that are going to fare very well. I looked at two in particular yesterday that are holding value that a client happens to own. But what happens is Oppenheimer in particular owns. They went in and made a bet, so to speak, and bought a fair amount of high yield at the time, and it's not going to work out for a lot of the mutual funds that are being managed by Oppenheimer. So individual investors are not going to get hurt as much from Puerto Rico. I don't think Atlantic City individual investors are going to get hurt a lot because it's not. I mean, if you say $500 million, and I don't want to make light of it because it's a lot of money, but in the world, Harry, that we work in, it's not a lot of money. So the market's going to certainly be able to absorb all that. It's not going to be a problem.
But it's a lot of money when you're charging people, $10,000, $5,000, $6,000, $8,000, $20,000, depending on the property at a time, and you have that amount of debt that you've accumulated over a number of decades. Brief time out, 31 minutes past the hour. He is Chuck Malamut, the best in the business, in my humble view, the official financial advisor to the Hurley in the Morning program in our 25th year together. Chuck heads up his own group at the Morgan Stanley Northfield office, the Malamut Group. 609-383-2010 is Chuck's hotline. We'll be back in just a few minutes. Chuck, when we come back, I want you to explain to our listeners the implications of Puerto Rico missing a full bond payment when we come back and how serious that is. We'll be back in just a few minutes. 35 minutes past the hour. Welcome back. Chuck Malamut, our official and exclusive financial advisor to the Hurley in the Morning program, continues. Our Atlantic County executive, Danny Levinson, Chuck, made a very interesting comment as we are discussing these financial issues this morning, both first with him and now with you. And that is, and I totally agree with this, I did not think about this, normalizing relations with Cuba. It gives Puerto Rico what Denny called just a moment ago a double whammy, because obviously a lot of travel and commerce that was not legally allowed to take place in Cuba will take place and is taking place, and that will be at the direct detriment to Puerto Rico, who already now has missed a full bond payment in first default. So how serious is this, Chuck?
Well, Harry, one of the things that we had chatted about several weeks ago, there was, all eyes were on Greece. And Denny's point is very well taken in the fact that more competition. Do we go to Cuba? Do we go to Puerto Rico? The $58 million was the bond payment that was interest payment that was due on August 1st. August 1st fell on a Saturday, so the next business day would be yesterday, August 3rd. So that payment, most of that payment was not made. Moody's ends
not
up,
most of it, all of it.
No, there was a small piece. $625,000 was paid.
All right. So why did they pay? They couldn't even pay the interest?
No, because the funds were not appropriated. The revenue was, it wasn't there. So Moody's, as we chatted a few minutes ago, views this particular event as a default, and so the payment of debt service on the bonds and the lack of appropriation because the money wasn't set aside and wasn't available, it means that there's not a legal requirement to pay the debt, nor there's any legal recourse to bondholders at this point in time. It's not, quote, it's not like they filed.
Now, let me ask you this, Chuck, because I don't know the answer to this. A legislature not approving the funds means you can't make the payment, but what could be different is, do they actually have the money, but the legislature just didn't approve it?
I don't think they have all the money.
So they don't have the money.
And
okay.
you think about it, S&P, now has taken the debt. We chatted about the downgrade of Atlantic City. Atlantic City came in as a single B, correct?
Correct.
So Puerto Rico, prior to this event, this is not an unknown. This is, this has been broadcast everywhere. And the fact that what I found simply amazing, it got absolutely no coverage leading up to yesterday. And yesterday was sort of I don't want to describe it as a non-event, but it wasn't a big deal. But they are now a single D. Think about a single D, and they were a double C before. So the fact that
what does that what does that mean? By the way, I mean that's D is D dead? I mean
D is yeah, D is. I mean you would. Let's put it this way: from my perspective, what we do all day. One, I'm not even quite certain on what we look at all day long as far as buying municipals for for our clients. Chances are a lot of that debt would now be removed from availability because of the seriousness of the debt and the fact that it may not get paid back. If it was in fact available to purchase, Atlantic City was at with the 7.5% handle, I think you said, for a 2027 piece.
Yes.
I would venture to say that the Puerto Rico debt would be at least, and again, don't hold me to it, I'm thinking at least a double, maybe even more. So man. You think about, okay, hey, it's great, but I'm going to get 14, 15, 18% of my money, but are you really going to get paid? And so they have some significant liquidity distress in Puerto Rico, and they're going to have to choose, what's going to get paid and what's not going to get paid as we get into the future over the next several months. So,
don't you think? I mean, I know we have to in this country, but nobody wants to hear it because everybody wants their Social Security, and I don't blame them. Everybody wants their Medicare, Medicaid. They want all the entitlements and all the different things, but don't we at some point have to grapple with the debt problem that we have here in this country and around the world? I mean, it didn't used to be like this. I mean, are we proving that we can't operate in this era the way that generations have been able to responsibly operate? There has to be a very serious, not just discussion that goes nowhere and then we just keep doing everything exactly the way we're doing it because that's the definition of insanity. But don't we have to really address this?
I mean, simply put, I mean, if you get paid, $1,000 a week, and that's your net pay after taxes, that's what you have to live off of. I mean,
but instead you spend $1,300, $1,400.
Yeah, and what happens is it eventually catches up. So,
so we have credit card spent our way into oblivion, basically. $18 trillion.
Well, I think. I mean, that's yes. I'm going to.
And look how fast it all happened. It all happened in a couple of presidencies. It wasn't that long ago we had a balanced budget. This is out of 239 years. This basically has happened in several decades.
Harry, I'm not going to get into.
That's not politics.
That's you're right. It's not politics. Numbers. You're stating the facts, and the fact is, and if you look at Puerto Rico, this is not an unknown. The debt was significantly downgraded for several years. Will they be able to work their way out of this situation? I mean, think about it.
Okay,
think about Greece for a second.
Time out. Let's stay with Puerto Rico, and then you go to Greece. Puerto Rico, and I don't know why I said I didn't know about the $628,000 payment because I did know about it, but they were responsible to pay $58 million of interest and principal that was due. They have $5 billion of, this is just Puerto Rico, $5 billion of principal and interest due over the next 12 months. This is according to Bloomberg data that they have compiled. I'm going to say it's accurate because I don't know that it's not. They couldn't make $58 million. They have $5 billion in the next 12 months. This looks like a bid coming, coming, Chuck.
Harry, what I think what I found to be pretty favorable yesterday was the fact that, as I mentioned, I bid. When you want to sell a stock, it's a fairly simple process. You can see on the screen where the stock trades, and if you're satisfied with that price, you put your order in as a market order or a limit order, day order, good to cancel, whatever it may be. Bonds work a little bit different, somewhat opaque. You can't really you can't see the bond. You can from an outsider perspective, you can see what they believe to be the price, but then you have to go bid the bond to make certain. Okay, is someone willing to buy that bond, and if so, at what price? Oftentimes, what you see on the valuation screen is very, pretty consistent. Maybe you're off 1%, 1.5%, which is not uncommon. What I found yesterday to be very interesting, that we were selective in a handful of accounts. These were unsolicited trades, buying Puerto Rico debt several years ago, and I was very, very pleased with what I saw as far as if the client was willing to sell the bond or wanted to sell the bond. It was priced very, very close to par. Now, again, it goes back to, Harry, understanding what you're buying and why you're buying it.
Who's buying Puerto Rico anytime soon?
Well, if you take a look at Oppenheimer, for instance, they were a very, very, and they still are a very, very big player in that marketplace. Most of the debt that is owned by let me back up. Most of the debt that was issued by Puerto Rico is not owned by individual investors. They're owned by mutual fund companies like an Oppenheimer. Now, they will be inside some of the high yield bond funds. There's no doubt about it, but most individuals don't own individual Puerto Rico issues. So this is not going to be, the end of the world, so to speak.
There were a couple things I wanted to just raise, Chuck. I know we've had a ground rule for 25 years. You don't talk about any one particular stock, but I'm going to make a quick comment that I'm amazed at how Twitter is used by every news network. Donald Trump tweeted something yesterday that was very provocative, and all these incendiary things that get tweeted in 140 characters or less. The sports world, LeBron James tweets he's staying with Cleveland. I mean, it makes so much news, and yet the buzz doesn't always equal the actual result of the company, because Twitter is closed at record lows, and there's concerns about their growth. So it's interesting how relevant it is. Doesn't necessarily equate to performance, does it, Chuck?
Harry, you have to have the revenue.
Yeah. I mean, I just think it's amazing that they're so relevant in every corner of the world almost. I mean, the Ayatollah tweets. The Ayatollah Khomeini tweets. So that's pretty amazing. And the other thing, Chuck, is oil dives another 5%, 6-month low, under 50. They're saying on China worry. But here's the thing, Chuck. If it's under $50 a barrel, why is gas still almost $2.50 a gallon?
Well, Harry, I don't think a lot. I mean, it has come down somewhat, but
a little
not.
Bit.
But think about it. The move in oil was literally just over the last day or two. The big move down. Last week, when you look, stocks around the world had rebounded. With the U.S. taking the lead, and a lot of that was because oil had firmed, but now, as a result of what you just mentioned, we're kind of going the other way, and oil had a big blow-off just yesterday, and now when you look at the average price at the pump, it's currently at roughly, again, this is as of the weekend, $2.75 for unleaded, versus a year ago at $3.54. The price of West Texas was $98 and change a year ago. Now we're at $47 going into yesterday. So
this is proof what you and I have been talking about for 20-some years, and that is that a price for a gallon of gasoline is not based even remotely solely on the cost of a barrel of oil, because it's almost in half, but the price has only come down about maybe 25%.
Yeah, 25, 30, maybe even.
Yeah.
So when you look, year to date, if you kind of carve out the sectors of the S&P 500, the best performing sector has been healthcare, up over 12%.
No kidding.
We
know why.
Worst performing sector is energy, down 12%. So again, Harry.
Hey, by the way, with the president's announcement yesterday, again, no politics. These are numbers. With the president's announcement of this basically assault on the coal industry in particular, is energy in for a rough ride?
I think, Harry, energy has been in through a rough ride over the last year. Ultimately everything.
But that's without the most onerous legislation ever, or at least executive fiat ever.
The old expression, reversion to the mean.
Yeah.
It typically happens. So at some point in time, oil, and I've heard, and I want to certainly be responsible for this, making this comment, because this is not my projection, but I heard, Harry, mid-30s. Before this stabilizes. So
now, as I say good, though, there's a downside to that too, isn't there?
There is a downside. Harry, here's what's happening. I mean, I know we're kind of pressed for time, but the consumer really hasn't taken hold of this reduction, even though it is 75 cents year over year. And when you say they're not taking advantage, they're not spending. Right. They're not spending.
And isn't the reality they're not spending because there's no confidence?
I think, Harry, that is very, very well said. And the Fed last week. I mean, the indications are.
Isn't the Fed left with a mess on its hands? I mean, how in the world will they even decide what type of environment we're in right now? We're not in a rate hike environment right now.
If you look at the statement that they made last week, what they said is they pointed to a quote unquote solid jobs growth, and in all likelihood they're waiting for a little more progress before they take that initial action. But we need to get out. We need to, Harry, we need to move, and the Fed has not provided a clear signal. Either way, about whether it's going to raise rates in September.
I'm going to say it's not their fault. I mean, we're not growing. This is the most unusual exit from a Great Recession in American history. We're not growing.
Harry, it's very, very hard, to be able to get the batter's box and swing the bat if you got one of your hands tied behind your back.
Exactly.
It's really impossible. So, we seem to think, September, December, but again, it's if you take a look at the yesterday's action in the market, again, it's all driven of what's happening day to day. The volatility that we have right now, Harry, is been amped up pretty significantly over the last several months, and slowing global economy, lack of growth, benign credit conditions that are out there. So we think that, as we started today's discussion, it's very, very hard to believe that we're in the beginning of August. I would never believe that we would be getting this much news flow coming from the markets. Earnings oftentimes get somewhat buried with all the other news that's going on. To move the market 1% in a day is not uncommon right now.
Chuck, your program is always exceptional. This was an extraordinary visit, and thanks for the overtime on top of it. Chuck Malamut, ladies and gentlemen, every Tuesday morning in the 8 o'clock hour. It is must-listen-to radio. I hear it all the time. Smart radio. Chuck Malamut, in my estimation, the best in the business. He's award-winning, and that is no overstatement. Multi-award-winning for his work, and that's documented in many, many different ways. Including in some of the highest, loftiest ratings that you can get in his field. Chuck Malamut brings us this program on a weekly basis. He leads his Malamut team at Morgan Stanley's Northfield office, and the information, views, and opinions expressed during this broadcast were those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast and are subject to change without notice. Neither the information you've heard that was provided by Chuck nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. Chuck, to say you brought it today is an understatement. Great. I had a great time with you.
Harry, thanks, and we'll see you again next week.
Look forward to it. He's Chuck Malamut. He's packing up his briefcase, kids, and I'll be right back.